One of the main mistakes beginner entrepreneurs or small business managers make is not working on their business accounting. Even though accounting may seem like a technical and tedious task left to the accountant, understanding this subject at least minimally is fundamental to managing your business the right and professional way. Because what many people don't know is that accounting goes beyond fulfilling tax obligations. It's your company's X-ray, showing its finances, helping to make strategic decisions, and even attracting potential investors. Therefore, to better understand how this can avoid unpleasant surprises and transform your business, we will now explain the main concepts of accounting for beginners in a very practical and summarized way. To try to make accounting very clear, we will explain the following points. 1. The basics of accounting, what it is and why it matters. 2. All its importance. 3. How does accounting help in the strategic planning of your business? 4. What does an accountant do? 5. How does accounting help your business? So, let's go. First of all, it is important to understand the central role of accounting, which is to provide accurate information about the financial health of your business. That is, accounting studies, records, and interprets the financial information of companies and the activities that affect their economic administrations, all through information and reports that guide managers to follow certain paths to have more profitability and business success, all according to the laws. Think of it as a map that shows where you are now and helps to plan the path to where you want to go. That's why accounting is one of the key pillars for your business to be successful in the short, medium, and long term, because it helps monitor revenues, expenses, and cash flows, allowing managers to understand the financial health of the company. Besides keeping proper accounting records, which is required by law, this includes filing taxes and fulfilling other tax obligations. In addition, with accurate financial data, managers can make informed decisions about investments, cost cuts, and expansions. Through accounting, it is possible to create budgets and financial forecasts that help plan the future of the business. At the same time, if necessary, banks and investors require financial statements to assess the feasibility of granting loans or investing in the business. A key point is that accounting helps analyze balance sheets and income statements, allowing one to identify areas of success and those that need improvement. And basically, all of this revolves around two fundamental reports in accounting: the balance sheet and the income statement. Both function as pillars that support your vision of the business. The balance sheet shows everything your company owns and owes at a specific moment. It's the financial snapshot of your business. In a practical way, it is divided into two main parts: assets, the resources you have, and liabilities, the obligations you need to pay. Assets reveal how you invested the company's money. This includes items like cash, inventory, real estate, and even accounts receivable. Liabilities indicate where the money used to build those assets came from, such as loans, debts, or equity. For example, if you have a lot of money invested in inventory or accounts receivable, it can be hindering cash flow. On the other hand, if you invest in machinery or technology, these assets may be generating more productivity. The income statement tracks over a period what came in, revenues, and what went out, expenses of the company, and shows what was actually left at the end, profit. It shows the performance of your business. For example, imagine your company has a monthly revenue of $20,000, but your fixed and variable costs add up to $15,000. Thus, the income statement reveals that the net profit is $5,000, but it also shows whether this is sustainable or if there's room for adjustments. With this report, you can identify financial bottlenecks, such as unnecessary expenses or opportunities to improve your profit margin. 3. How does accounting help in the strategic planning of your business? A common mistake among small entrepreneurs is thinking that the company's profit is simply money in their pocket. Although it's tempting, it's important to think long-term. Profit should be seen as an opportunity to reinvest in the business and ensure its expansion. For example, you can use part of the profit to purchase new machinery or equipment and improve the structure. Invest in technology to automate processes. Expand your inventory to meet a larger demand. Train your team to improve customer service, among many other examples. As a result, this reinvestment is called a compound growth rate. Basically, compound growth rates show how much the initial value grew over a certain period to reach the final value. They are also used to see if it is necessary to adjust returns, simulating a constant growth of profits repeated in each cycle. Certainly, they are one of the main indicators, KPIs, that financial leaders should monitor to analyze the average profitability of the company's investments. So, if you want to know more about compound growth rates, write compound growth in the comments, and if there are enough comments, we will be happy to develop a video about this subject. 4. What does an accountant do? Many entrepreneurs see accountants only as someone who calculates taxes and sends documents to sign. But good accountants can be much more than that. They can be strategic consultants, helping you interpret the numbers and make better decisions. In other words, good accountants can provide detailed reports, translating financial information into practical insights. 5. How does accounting help your business? Successful businesses have something in common: planned and sustainable growth. This happens when the entrepreneur uses accounting as a tool to monitor, plan, and continuously improve the performance of their business. Because here is the logic of accounting. It enables analysis of financial reports, balance sheet and income statement, identifies bottlenecks and opportunities, provides a solid foundation to reinvest part of the profit in strategic areas, monitors results, and enables adjustments in company strategies as needed. This approach ensures that your business grows in a structured way, gaining an advantage over the competition and adapting quickly to market changes. Key points to succeed in an increasingly competitive world. That's precisely why we always say that the success of a business doesn't depend only on passion and effort, but also on solid management. This financial part cannot be left out of it. Thus, accounting is a powerful tool that helps to make more conscious decisions and plan the future with greater security. So, take the time to understand your business numbers, invest in your accounting, learn to interpret the reports, and use this information to grow. Remember, profit is not just a reward, but an opportunity to reinvest and create a more solid, competitive, and profitable business. Therefore, if you want to know the most common mistakes of beginner entrepreneurs, watch this video to find out if you make these mistakes that are dangerous for small businesses. To watch it, just click on this button here or on the link in the description. And just to recap what we talked about here: the basics of accounting, what it is and why it matters, all its importance. How does accounting help in the strategic planning of your business? What does an accountant do? How does accounting help your business?
We hope you enjoyed it, and if you want to know more about how to set up and manage your own business, visit our YouTube channel where we have several videos about this subject, and if you liked it, share this video with your friends and family to help them too. Thanks and see you next time.